All right, good morning. It is Monday, September the 9th, 2024. Hope everyone had a really nice weekend. Here in Charleston, it was much cooler, quite rainy kind of all throughout yesterday, but Saturday was a cooler day, which was nice. You're coaching my daughter's soccer team again here this fall, which is always just a blast. But to be out there running around with the girls and not just be dripping sweat like I usually am was a welcomed something new. So that was good. Looking at markets last week, the big economic number that dominated the headlines that was released Friday is going to be, or was, the August employment report. Okay, so the number is mildly disappointing. Okay, so a little less, 142,000 jobs was a little less than expected. And really, I think what more people were focusing on was actually the previous month. So the way it works, they release like the August data in this case, but if needed, they make revisions to the month prior. And I think what caught a lot of market participants off guard was that they revised July to only 89,000 new jobs. Okay, so 89 was much worse than expected in July. 142,000 wasn't as many jobs as they thought would be created in August. Okay, so definitely a weaker than expected report. Not surprisingly, you got the reaction you would expect from both the bond and the stock market. So the front end of the yield curve went down considerably. Okay, so and again, this consensus now, this of course can change with this week's inflation data coming, but consensus as of Friday when that report came out was that the Fed will actually cut by 50 basis points. Okay, so 0.5% in the upcoming meeting. They're definitely cutting at this point. It's just a matter of will it be a quarter point or will they cut 0.5%? So we'll see. But again, that 2-year note on Friday was at 3.66%. Okay, that's the lowest it's been in a while. We now have an upward sloping yield curve. Okay, so the 2s, 10s, 30s all in a nice line higher. I don't know, maybe I'm just a huge dork, but like something about a normal sloping yield curve like gets me excited. We haven't had a normal yield curve in a while. It's been inverted for a couple years now with just where the Fed had rates. I don't know. Maybe I'm just a huge nerd, but so that's the bond market. Equity markets also reacted the way you would expect. Okay, weaker than expected employment data means in theory people have less to spend. Again, you keep connecting the dots. Less to spend, potentially less profits in the coming quarters, year. So depending on the index you're looking at, the Dow was down about 3% last week, S&P down 4%, tech heavy down closer to like 6%. I think we talked about Nvidia last week. Kind of that selling has kind of continued through that throughout the tech space. Nasdaq down about 6% last week. So I don't know. We'll see. We get some inflation data this week. So CPI as well as producer price index on Wednesday and Thursday, respectively. So we'll see. It really makes markets fun, but it's been more fun seeing many of you for the reviews the last handful of weeks. Looking forward to kicking off another week here this morning. So questions, comments, concerns, please don't hesitate to reach out to our team, and we'll talk to you soon. Thanks.